Okay, folks, welcome to Thursday Night Stock Charts Live. This is Bob Desmond, and what we'll be talking about tonight are earnings out of Amazon. A big miss. You're looking at this chart after hours right here, right now, and it's going to be an ugly open tomorrow morning. The good news is that, I'll get to that in a moment. So, what else are we going to go over? Thursday night, so therefore it is almost Friday. That means that we go to the weekly charts. We see how we're poised to close out the week, and not just the week, the month. So we have a lot to go over here. Welcome to everyone. If I could ask you to please smash that like button, I'd really appreciate it. The show is sponsored by TrendSpider, Automated Technical Analysis, Scanners, really the next level in trading software. So if you enjoy the software, I'm going to demonstrate it in a little while. 35% discount code below, the lowest price on the web, TrendSpider. They have a demo tour. Just use that link and make sure you use my code. Okay, let's get to it. Amazon is down a couple hundred points. I mean, this is a 2 standard deviation move. And I was entertaining trading Amazon. I opted for Twilio, but the risk v reward just wasn't in it for me. And I could share with you the strike. We would trade strangles. We're going to talk about our trades for this week as well. Our strike on Amazon would have been about 34.80 to the put side. Franklin, Mac Carter. Your grocery shopping and listening on your earbuds, outstanding. Multitasking. So the strike, which would have been pretty far out of the money, it cut through it like a hot knife through butter. So this is the reason why we really do a lot of analysis of what strikes we want to use, the risk versus reward. So I'm glad we went with Twilio. We're going to go over Amazon's earnings in a minute, and they were not good. They were not good. The guidance is what is really what's going to get everybody. Let's go to Twilio after hours. Now, our strikes, for those not familiar with short strangles, it's when you sell options. You sell a deep out of the money call option, a deep out of the money put option, and you collect the premium. You're not buying them. So it's called a undefined risk with a defined outcome, but with a high probability of success. Now, our strike on Twilio is 355, right, Franklin? 355? So we have another $31 downside plus the credit to cushion our trade here. So we're going to let this expire worthless tomorrow. Going back to Amazon for a moment, I forgot to mention for disclosure purposes, I did buy some in the after hours, right about here. It had a 3,400 handle on it. So I'm down on that. It was a speculative trade, not a huge position, but I figured we'd get a bounce. I mean, nothing. This is dead money. Facebook, dead money. So what we view as being optimistic about the Amazons of the world and the Facebooks of the world, which had poor earnings as well. Actually, good earnings, forward-looking guidance, not good on Facebook. Remember that these stocks are owned by major institutions. There's probably not a fund out there that doesn't have a piece of these, except that they're an emerging market fund. So they can't just let Amazon drop. They can't just let Facebook drop. If you take a look at the price action today on Facebook, it gapped down. It just traded sideways with a bias to the downside all day long. So they're going to rally Facebook in the next couple of weeks. They're going to rally Amazon in the next couple of weeks. But then the test is always at the top. Do we break out or do we break down? I'm thinking we break down. Why? I think yields are going up higher. So let's go to the details out of Amazon. Okay, I'll save you all of the numbers, and we'll just go to. Oh, there's a few numbers here. That's bullet point. I look for bullet points. Net sales, 113.1 billion. You'd think that'd be good. Nope, missed by 2 billion. EPS beat. This is why you always got to look at sales. They play with the numbers. So, free cash flow. This is what we do with our options trading. Free cash flow. Nothing like it. Plunged 62%. This is for last quarter. Now, the projections for this coming quarter are nightmarish. This quarter was poor. This quarter is going to be the worst. This upcoming quarter, assuming that they don't beat, is going to be the worst since back in 2015. It gets better. Free cash flow. Look at this precipitous drop. Now you wonder why Jeff Bezos resigned and went into outer space, leaving the poor son of a gun holding the bag that took over his role. Amazon profit margins declined. They don't work on big margins at Amazon. Very, very thin margins. And they dropped by almost 2 percentage points. So, not good trending here. I didn't take a look at this. Amazon Web Services is big. Man, and even that came in poorly. Sequentially lower versus the prior quarter. You always want to see these lines rising sequentially. International business. Reduced. North America. I mean, this is just bad across the board. Their cloud business is looking pretty good. Expect layoffs. Look at all these. I think they're still hiring, though, as a matter of fact. But look at the number of employees they've hired. This is a 2 standard deviation move on Amazon. So we may get a rally back tomorrow. We're not going back all the way to the closing highs. We may retrace. This is when you take your Fibonacci retracement tool out and you mark your points, you buy points. Let's see where Amazon is now. Yeah, we're consolidating here at around 325.06. And in fact, that is where I believe we have a volume shelf. For those folks not familiar, this is TrendSpider, automated trend lines. Again, use the link below. Here, right here. It's not reflected on this chart, but we are right down here at current. Big gap down. We smashed through multiple support levels. Man, let's take a quick peek at seasonality. This goes back 14 years. July, strong month. August drops down. Tell me about it this year. August is not going to be a good month. So it's going to be an interesting day tomorrow. End of the month, end of the week. Let's go to the chat box. SBUX took it on the chin. Franklin, thank you. Yeah, so we're good on our spreads with Twilio. Facebook forward guidance consists of stealing identities and selling it to China. Man. RL. Hello, RL. Jody, hello. All right, let's get to the weekly charts. All right, remember, folks, these are not just the potential closing weekly charts on a weekly basis, but also on a monthly basis as well. So, as I always like to say, this is just a glimpse of how we're poised to close out the week, not indicative of how we're definitely going to close because we have one trading day left to go. And I think tomorrow is really going to be a big day, especially for technology and the Tues. So let's begin. We're going to go over weekly charts, daily charts on most of these. Yields. I think yields are done going down. This is why I'm so bearish on tech. We had a big rally off of the week last week. This week, an inside week, no breakout yet, but our weekly Stokes are hooking up. RSI, still declining, but potentially flattening out. W formation on Ultimate Oscillator, looking good. Daily chart. Now, the daily chart yesterday was a bit indecisive. Today, a bit more decisive. Not because of the price action on the yield, but more so on the TLT, the 20-year bond ETF. There was a strange anomaly with both the TNX, the 10-year yield, and the 20-year bond ETF yesterday, and that was resolved today in favor of yields. Stokes have broken out daily time frame. RSI is now broken out. It's hard for you folks to see, but I can see it on my end. And price, Doji Star formation, I think we're going up higher on yields. Now, the 20-year bond ETF, I've been warning for a while now about, this is a weekly chart, the potential for a head and shoulders setup. Left shoulder, head, right shoulder. Here's your neckline way down here. So what you'll know when this economy is done, when you see bonds drop and the dollar drop precipitously at the same time. That's a loss of faith in the United States. Daily chart. Now, yesterday, after Jay Powell spoke, beautiful bullish key reversal on Thursday, and you would have expected a follow-through, but we didn't. We gapped down. We had an inside day today. This is why I believe that yields are probably going to push up higher. Now, what I want to do quickly is take a look at bond action in the after hours, because the news out of Amazon may have people moving into bonds. Before we go there, let's check out the NASDAQ 100. Woof. Down 0.75 percentage point. Probably not going to be a nice open tomorrow. But we're short, so we're happy. All right, so this is the 10-year Treasury bond. Down slightly, holding support. Jury's out. Okay. The tips. Weekly chart, new all-time highs. RSI 80.25. I think they were down today. Volume, look at this volume, beautiful. Daily chart, bearish key reversal bar on the day. So we may pull back here on the tips. The US dollar. Absolutely and utterly annihilated. This chart here speaks volumes, especially if we see a breakdown below this lower band here in blue. At current, we're down below it. But today, we did land at a support level, and we may see a bounce tomorrow, especially if you see weakness in the market, the stock market, and money moves into money market accounts. That may drive the US dollar up higher for a short while. So watch for a close down below the support level. If we close down below the support level, it's all over for the dollar. Take note that we hit another, this is our third lower high at this resistance line. The dollar is critical for silver, gold. Daily chart just crushed, down nearly a half percentage point. We do have support immediately below, at support technically. So this chart here is very bullish for silver and gold. The VIX up on the week, but we faded off the highs, subject to change probably tomorrow. Daily chart. We gapped down today and we stayed down today. We bit of a rally off the lows. The Dow Transports. Weekly chart. Down on the week. Great bullish reversal bar last week. I'll tell you, if we fade and we take out the lows of last week, that's very, very bearish stuff. I don't think that we will. Let's check out the daily chart. Let's update this. Sloppy chart. Yeah, we're right at resistance. We hit resistance today and we backed off. So the transports, a little iffy here. The Dow Jones weekly chart up on the week. Slightly. Very light volume. No conviction whatsoever. Daily chart. An up day. Volume light. S&P 500 weekly chart up 0.17%. Remember, a couple of weeks ago, the stochastics broke down. And we are putting in lower highs here on Stoch RSI, volume light on the week. The small caps, a very good week so far this week. Why? Because yields have been inching up. The small caps want that because it's the perception is there's a growing economy out there. And technically, yeah, there is a growing economy. It's just a recovering economy. We missed by two percentage points on GDP today. They expected 8.5. They got 6.5. So we're already seeing a loss of momentum from reopening, and now they're just moving towards more probable lockdowns in advance of the election. Stokes are very weak here. Volume light. Daily chart. Gapped up higher today, but faded on the day. RSI is broken out. Volume light. Equities are very iffy right now. Qs down on the week by a half percentage point, nearly a half percentage point. Daily chart. We're holding the breakout. So even with the Amazon report out, the Facebook report out, Uh, you you still can't short the Tues. We stopped out of a portion of our position last week. I'm looking to reopen, but I want to see a breakdown. I want to see a rollover here. We may get it tomorrow. The banks, very good week this week. So far, Thursday night, one trading day left to go. We have recaptured the prior lower band of this triangle formation in blue. We continue to lose momentum. Now, here's the rub for the banks. The banks have been moving up higher due to yields rising. But what if the markets sell off tomorrow and into next week, and then you get money rotating into bonds, which will drive down yields, and into dollars? That's not going to bode well for the banks. So I'd be very, very careful with the banks right here, right now. Let's watch how they close. Let's watch and see how the market reacts tomorrow. Do they sell? Do they dump? Do they move into the safe haven of treasuries? We'll know tomorrow. That's for sure. Right now, in the futures, it's not showing that there's a flight to treasuries just yet. In fact, they're down slightly. Daily chart on the banks. Daily chart, we have broken out above a fairly tight consolidation range. I wouldn't be a buyer until we've closed above 37.25 per share. You're seeing RSI really improve here. Stokes improve. So I'm probably going to be a buyer of the banks, assuming that we close strong on the week. Falcon, Bob, before the dot-com bust, did you have an inside the heart feeling? You mean like intuition, Falcon, about the markets? Let me know and I'll give you an answer, because I remember those days as clear as day. Okay. So, I'm not gonna sit here and pretend that I haven't been subject to the lemming mentality, the herd mentality. I certainly have been. During that time frame, I entered the markets at the beginning of, let's say the back half of the 80s, but the bull market, which began in 82, was already in full effect. Then the internet came out and telecom came out in a very big way. And the inflation was going this way, yields were going this way. You had a very friendly Fed, and the market did nothing but go up. It was just utter insanity. And then you had year 2K that hit. I don't know if anybody's familiar with that. There was a fear that our computers wouldn't roll over to, say, 2000, but that they would roll back over to, say, 1900. It was like the craziest thing. So what did that do? It caused huge amounts of investment into new computers, servers, whatnot. It was just nuts. It's no great shock that 3 months after 2000 hit, that was the peak. So, that being said, yeah, I was a part of that herd mentality. When I knew it was coming to an end, or that it was just ridiculous, was that I was selling. I wasn't even doing strangles. I wasn't hedging. I was selling naked puts on. I specialized in a company called PMC Sierra. It was a semiconductor stock, very levered to Cisco Systems, and I think Cisco made up 10% of their revenue. Very, very high risk. But the premiums I was getting paid for selling puts was crazy. And I wasn't using probability indicators. I was selling at the money or just out of the money puts, but you couldn't not make money. But one day I'm walking with my brother down Times Square in March of 2000. I sold the 165 puts on PMC Sierra. It's no longer around. The 165 puts, like 2 days prior, I was walking in front of the NASDAQ market site. I peered through to take a look at what my quote was, because they had the ticker going around. I didn't have a phone back then. So it was at like 2:35. And I was like, this is nuts. Can this really last? And so not that I acted on that intuition. I did not. I'll be honest. I did not. I took it on the chin for a while. So I knew it, but I didn't act upon it. But that was like the big I would never herd mentality trade again. I became a complete and utter contrarian. But I respected the trend. But that intuition that I had, I've never, ever ignored since then. So it was an expensive lesson to learn, but I've made it back. So I'm okay. So I hope that answers your question. You remember that? It was nuts. It was nuts. It was I think personally, I think it's crazier than now. The only thing that's more crazy about this time is how the Federal Reserve is just out of their minds along with the federal government. I mean, back then, we were that year, we ran a surplus. That was the last year we ran a surplus. So we've been running deficits ever since. So it's a completely different world. Pre-drag. Back in my days, I had to walk down to the market and check the prices. Macarta, always bullish. Diamond hands. Yeah, pre-drag. I tell that story all the time because it keeps me humble, and I hope that people learn from it, the insanity of speculation. Technology, weekly chart. So we have a new weekly high, but we've pulled back, obviously. Volume is very light on the week. Daily chart. We've been retesting this support level. This is that rule I have. I like to see it retest once. A second retest, okay, I like that. A third retest, I start getting iffy. It's like, why can't you move up higher now? All right, you retested a couple of times here. You know, I know there are enough technicians out there, guys like me, that we look at that and we're like, okay, game on. Where are the buyers? So I don't think, if I had to bet a nickel, I don't think that this holds tomorrow. I think we break. It's a pretty easy bet for me to make, given that Amazon is so weak. Yes, I admit that. The semis. A nice weekly breakout here, assuming that we close above 260. We close at 261.81. Volume light. Daily chart. Strong day, man. Really strong day. Good. Semis look good. Biotechs destroyed. I mean, they've rallied back, but I mean, this chart as a whole is just a nightmare. Stokes are rolling over down below 50 on a weekly time frame. I do not like it. Maybe on a daily chart. I do not like it. Bearish key reversal bar. Remember, Stokes trading down below 50. Rallies tend to fade. That's what you're seeing here. Consumer Discretionary's weekly chart. Strong week. I mean, wow. Daily chart. I'm going to take a look at Starbucks in a second for Matt Carter out there. Strong day today, up 1.13%. Volume a little bit light. Watch out for your ultimate oscillator. Probable lower high here. RSI, same deal. Let's check out Starbucks. I don't have it on this chart list. My old chart list. Starbucks. right, gap down. Let's get rid of this line here. Big gap down. What did they report? They reported earnings? Let's bring up TrendSpider. Let's talk support and resistance. All right, so if you're swing trading this, the automated trend lines told you when to get out. Right here. Click of a button. I did not manually draw these lines. This is the algorithm. Let's go to a weekly chart. Now, what I've done here is I've overlaid on a weekly chart monthly support levels. They're reflected in green dash line. I'm going to overlay weekly support and resistance levels. They're reflected in solid line. So the support level that must hold here, we're probably going to retest it, is 119.14. Daily chart. Now the monthly support level is way down here below support at 108.50. Daily chart. I think the next target is going to be 120.03, but ultimately I think support down here at 119 gets retested. So I wouldn't buy this quite yet. I think he needs a bit of a pullback. Hey, Larry. Quote from rapper Snoop Dogg. All right, I got to read this. Okay, here we go. Quote from rapper Snoop Dogg on stocks. Sometimes a loss is the best thing that can happen. It teaches you what you should have done next time. Good point. Good old Snoop. They beat everything across the board. What about forward-looking guidance? It was probably priced in, though. That's the thing. McCarter, I'm literally standing on aisle 10 in Kroger's by the soups watching my phone. That's awesome. Watch 120.03, but you really want to take a look at 119.05 if you're looking to add or set up stop loss orders. All right. Let's go back to the weekly charts. We're almost done here. Energy. Stokes are down below 50 and declining. Good week so far, up nearly 3.5% on very light volume. Daily chart. An up day, but a bit of a fade. Stalled at resistance at the 20-period moving average, which is declining. You're probably going to need a pullback here and then another rally at the 20-period moving average, which has got to flatten out a bit. They're going to need to take out some of these weak longs. Oil up on the week. Looks like it's going to get ready for another rip up higher, especially with the dollar dropping now. Think about it. Oil's been ripping up higher on a rising U.S. dollar. Oil is priced in dollars. Think about how expensive it's going to be when it goes down like this. Emerging markets. Beware emerging markets, folks. This chart is better than it was earlier in the week, but they have the Chinese plunge protection team in there buying stocks. So 30% of this ETF EDC is made up of Chinese stocks. So I would avoid for now. Or find another fund that does not have mainland China. No mainland China stocks here. Gold, weekly chart. Outstanding week, up over 1.75%. We're up above resistance. The question is, do we hold it? We'll know tomorrow, 4 p.m. Daily chart. Beautiful move up higher today. Really nice. Up 2%. Look at this breakout. I was talking about this with members about this compression zone and that this was probably going to get resolved to the upside. And sure enough, it was. Now remember, we're heading into August, which is a seasonally favorable month. And it was 1 year ago, August, that we made new all-time highs on gold. So we're heading into a seasonally favorable period of time. GDXJ weekly chart. Nice week. We own the GDXJ. We added more last week at the lows, near the lows, I should say, not at the lows. We're up over 5.5% this week. Daily chart. Let me go to my annotated view here. Big gap up higher, a bit of resistance and some fade on the day. But you know what? Up over 2.5%, I'll take that. We may get a bit of a retrace, a filling of the gap here tomorrow, Monday. That's okay. Gold money, of which we, oh, you know what? I'm not going to go over gold money. Actually, I am going to go over gold money. It broke out today. Good stuff. We own this. Nugget, I'm out of sequence here. Nugget up on the week. We own Nugget up over 11.75% on the week. We bought more yesterday on the knee-jerk reaction on the Fed news. We had an order down there. It got executed, and bullish key reversal bar yesterday, and today a very good day. Up over 5.33% on the day. But we rallied up and into resistance here. All right, so we may get a filling of the gap. So if they gap it up tomorrow morning, I would not go chasing it. The silver miners, of which we added more to yesterday, they're up nearly 8% on the week. And up nearly 3.5% on the day. Again, a bit of a fade, just like you saw on NUGT and GDXJ. So expect some backing and filling. It's not going to be a straight shot up higher. Silver, weekly chart. This is our leveraged ETF, putting us long of silver. We are up nearly 3% on the week. We have added more. Actually, we added, sorry, we added silver, more of silver yesterday, not SILJ yesterday. SILJ we added more of last week. And we gapped up. And the reason why we bought more AGQ yesterday is because of this bullish key reversal and the collapse of the dollar. So let's take some requests. First, I want to go back to the after hours session, see what's going on there. NASDAQ 100, very weak. The futures, not looking good. Russell, not looking good. They're up slightly, but this looks like a head and shoulders setup. Left shoulder, head with a double top, right shoulder. But remember, this is only a 15-minute chart. Let's watch for a break of the neckline. Twilio. Franklin, if you're still on, Twilio looks like it's going to open up well tomorrow. Basically flat relative to the close. So those options should expire worthless tomorrow, which is good for us. AMZN. Not much of a rally back here, I'll tell you. This was a 2 standard deviation move, and man, rough. All right, let's take some quotes. Yeah, Twilio, that's our last trade for the week. Oh, ExxonMobil comes out tomorrow. Good. Okay. So, folks, members who joined in on the Twilio trade, we're going to let those options expire worthless. I'm not putting an advanced order in to get out. Our target so far this week, we traded Tesla. We traded Microsoft. We traded Facebook. All profitable. This was a little over 50% profit. Microsoft over 50% profit. This was a 70% profit on Facebook. Remember, we're talking about options here. We're not talking about the common stock. And Twilio, we should do well. We don't know what tomorrow brings, so we don't talk about our trades until they're closed. So, fingers crossed. Okay, what do we got? First, I got to go to the members area. They pay to keep the lights on, so. And we're going to go to about 7 tonight. It is now 6:42. And we have DraftKings. We haven't looked at DraftKings in a while. Okay. DKNG. All right. Monthly chart, DraftKings. Looking pretty good. We're down on the month, but we're flirting with a close above 50.28. Where do we close today? 49.80. We're right there. So we need to close above that mark to close out the month halfway decent, because you're seeing a lot of bottoming action here. That's bullish stuff. Weekly chart. 50.28. We got to close above that mark. Otherwise, we're probably going to roll over. We spoke about this the other day, where we broke down here this week, rallied back in an effort to recapture, didn't do it. This week, attempted to, didn't do it. Close, no cigar. All that matters with these stocks that sell off, when you're looking for them to break out, all I care about is, do they close above resistance? Are we putting in higher lows and higher highs? I'm not seeing that here right now. You want to avoid DraftKings. Daily chart. Here's the value of the algorithm, the automated trend lines. Take it off. You would have known. Don't buy at the high today. Why? Click of a button. Resistance. We're probably going lower here. I don't like DraftKings. Avoid. Avoid. Unless we close above, what did I say, 50.28? But I doubt that's going to happen. CCJ. It's got to close above 1855. Absent that, I would avoid. Weekly chart. Up week last week, we captured a couple of support levels. If it pulls back and holds 1760, that would be interesting. But I'm not in love with this chart at all. So keep it active for a few days, and that's it. Let's take a look at what we have in the live chat. Starbucks we did. DPST. Interesting one. Regional bank leveraged ETF. Got to watch yields. Ooh, All right. So, monthly chart. Automated trend lines. For those just joining in, TrendSpider, 35% discount code below. We broke out several weeks ago. Several months ago. April. This is a monthly chart. April broke out above monthly resistance, rallied, pulled back, retest number 1, retest number 2. Interesting. Very interesting. Weekly chart. There's that monthly breakout point overlaid on a weekly chart. I don't love the setup here. I think I would feel better with a close above. DPST's trading at 194. Oh my God, I remember this was trading down at 80. 194.19. Daily chart. Yeah, you got to see a close above 194 and change. Because what you're setting up for here, you've done nothing but go straight up since July the 19th. You need a pullback, a more serious pullback, and a higher low. And then a breakout above resistance. Right now, I would watch yields. It may spike up higher. If yields spike up higher, given the market action I'm expecting tomorrow, you may not get that pop. You may actually see weakness on yields. Cat. Looking good. Cat's looking good. Basing along the support line. Yes, it's down on the month, but it's holding support. Weekly chart. We broke out this week. One trading day left to go. But if we close above the support level at around 210 per share, good stuff. Daily chart. So we broke out here, retest, 1, close to a retest, and then a follow through today. We closed off the highs of the session. No big deal. CAT is looking good. When do they report? Are they tomorrow? Yeah, they report tomorrow. Okay. I knew. Something was happening with them. Okay, so Caterpillar reports tomorrow. As I'm sure you know, JW, KRBN, Crane Shares Global Carbon ETF. Not loving the monthly chart. The weekly chart I like. Nice consolidation. It's a good looking chart. I wish we would have held the highs of the month, but we did fade. But we are holding a support level. I think you could buy this, but use a stop right down below. Let's call it $33 a share. Daily chart. Nice moves up higher here. I think it's going up higher. So it's looking good longer term. SMH, Clack might be, RL Clack might help the SMH. That's not a request. RETL. Not looking bad. We broke out this week on a weekly time frame breakout. Are we getting a confirmation on RSI? No. So we may dance around the support level for a week or two more. Watch for a breakout on RSI weekly time frame. You really want to see that along with price. That's lacking right now. Daily chart. Daily RSI looking good. Price consolidating nicely. A little bit of a fade off the highs of the day. But I think that if this market holds together, this is probably going to move up higher. DXCM. Wow. Very nice month. Very, very nice month. You're probably going to have a breakout here. What I would really like to see here is all time frames good. Is a retest next week. We broke out here. Retest 1, retest 2. You may not get it. You may just get a follow through to the upside. But I'll set an alert anyway. Touch, bounce, good to go. Daily chart. Bearish reversal bar today. No big deal. As long as we hold support here, where we have our alert, it's good to go. I think it's moving up higher. All right, what else do we have? Let's circle back and take a look at the futures. Amazon's still very, very weak. RSI on a 4-hour chart is at 19. And we're trading down below the third standard deviation Bollinger Band on a 4-hour chart. Shockingly weak. Twilio. Looking good for our options trade. The dollar continues to weaken here in the after hours. Gold down slightly, but holding those gains. Nugget, not much change after hours. The Russell 2000 fading here a bit. Remember that head and shoulders setup we spoke about earlier? NASDAQ 100 is weakening up yet again. It was down 0.7%, 0.74%, now 0.78%. Let's check out Microsoft. Looks like they had a flash crash in the after hours. Remember, Microsoft's the largest component of the triple Qs. Apple, the second largest component, closed at 145.64, down slightly in the after hours. VIX, strong in the after hours. Yields, unch. It's going to be an interesting day tomorrow, folks. So I would strongly suggest don't make any moves early on in the day, unless, of course, you get an extreme oversold condition. Maybe Amazon. I thought I got in with my small position at an extreme oversold level. Guess what? It got weaker. So the fact that you have a buyer's strike on Amazon is a real chilling tell. That's a hell of a drop with no bids. And with that, folks, I'm going to say, everybody, thank you for joining in. Click that like button if you want. Subscribe to the channel for future videos. Thanks for joining in. Have a profitable trading day tomorrow, and have a great weekend. Be well.